keeps blocking black wealth? We digging deep to free ourselves.
Back to Who Keeps Blocking Black Wealth, the show where we laugh, learn, and build.
And where every week somebody finds out they was them the whole time.
Because around here, they is you.
You
know this, Harold, and we believe black wealth is biblical.
My wallet still needs deliverance.
Why are you starting already? We're here to talk about money, systems, faith, and the stuff nobody explained to us growing up.
Including the stuff they hoped you'd never ask about.
I'm Dana Mitchell.
You sure are.
Say hi to the people, Harold.
Gas money first.
Lord have mercy. Let's get into it. You probably know by now it's time to talk about what changed this week and why it matters. One of the financial stories still making noise this week is federal tax policy, deductions, credits, rate changes, expiring provisions, who qualifies, who does not, and which parts of the tax code benefit workers, families, business owners, investors, and retirees differently.
See, soon as you say tax policy, folks start reaching for the remote, because that sounds like something accountants argue about in a windowless office.
And that is exactly where people disconnect from the story, because tax policy is not just about filing a return in April. Tax policy is one of the ways government decides what behavior gets rewarded, what activity gets discouraged, who gets relief, who gets audited, who gets incentives, and who gets left trying to figure it out after the rules have already changed.
So while regular folks are asking, how much they taking out my check? Somebody else is asking, what kind of income is this?
That is the difference, because the tax code does not treat all money the same. Wages are treated one way. Business income may be treated another way. Capital gains may be treated a third. Retirement withdrawals may be treated yet still another way. Kilometers immediately. And certain accounts may change how money is taxed before it ever gets spent.
So two people can both say they made money, but one of them made paycheck money, and the other made structured money.
Now you are paying attention. And there is a civic layer here too, because tax policy is written through law, which means elections matter, legislatures matter, budget priorities matter, state policy matters, local tax decisions matter. And when communities ignore those elections because they sound boring or irrelevant, the rules still get written.
And then we wake up mad at the game after somebody else already read the rule book.
That is why this matters, because most of us were taught how to earn labor income. Go to work, get paid, pay bills, try again next Friday. But very few of us were taught how different types of money are treated inside the system.
Because folks out here chasing raises, while the wealthy be chasing structures.
And voting for what and who benefits them most. But when you really think about that, this isn't a new conversation. People have been wrestling with taxes, government revenue, power, and fairness for thousands of years. In fact, Scripture has quite a bit to say about it. Proverbs chapter 29, verse 4 says, "By justice a king giveth stability unto the land, but he that receiveth gifts overthroweth it." Now, this proverb is fundamentally about governance. Just systems create stability. Corrupt systems create instability. And throughout history, governments have always created systems of taxation, tribute, incentives, privilege, and financial extraction. Some systems create opportunity, some create burden, some create both at the same time. But the point is that governments have always been devising ways to fund themselves and the institutions they build. And ordinary people have always had to learn how to navigate those systems successfully.
Now, 1 Samuel chapter 8 hits this same issue from another angle. God warned Israel that once they demanded a king, Eventually, that king would start taking your sons, your daughters, your fields, your grain, your flocks, and eventually, a tenth of what you produce. Meaning once those so-called systems get built, they got to be funded somehow. And how they do that? Imprison poor kids, raise property taxes until people default on land and houses they already paid for, use tariffs and policy shifts that end up crushing small farmers and local producers.
All right, Harold.
Am I lying?
Anywho, as scripture shows, governments have been devising systems of taxation, tribute, incentives, and revenue collection since biblical times. And ordinary people have been trying to figure out how to live, work, provide for their families, and adapt to those systems ever since. So today's conversation isn't really new. It's part of a discussion people have been having for thousands of years. To sum it all up, in the New Testament, Jesus is asked directly about taxes in Matthew chapter 22. The people questioning him thought they had him trapped. If he supported the tax, some people would be angry. If he opposed the tax, others would accuse him of rebellion. So Jesus asked to see a coin, and he asked, "Whose image and superscription is this?" They answered, "Caesar's." And Jesus replied, "Render therefore unto Caesar the things which are Caesar's, and unto God the things that are God's." Jesus recognized that governments require revenue and civic systems exist. But he also reminded people that government is not ultimate. There are things that belong to Caesar, and there are things that belong to God. Which also reminds me of an interesting myth. Rich people don't pay taxes because the system is rigged.
I mean, that's what everybody says.
And that's usually where the conversation stops. Somebody sees a headline, hears that a billionaire paid a lower effective tax rate than they did, and immediately concludes the rich don't pay taxes.
Not just effective rate. Sometimes the total tax owed is only $47. Meanwhile, we're looking at our paycheck wondering who stole all our money.
The reality is a little more complicated than that. Most wealthy people absolutely pay taxes. The real question is, what type of money are they paying taxes on?
You said that earlier.
But it bears repeating. The tax code doesn't treat every dollar the same. A dollar earned from a paycheck may be treated differently than a dollar earned from a business. A dollar earned from a business may be treated differently than a dollar earned from an investment, and a dollar earned from an investment may be treated differently than a dollar withdrawn from a retirement account.
Same dollar, different rules.
Now you're getting it. This is exactly where most people get tripped up, because we spent decades teaching people how to earn money without teaching them how different types of money are treated.
So when folks say, the system is rigged, what they usually mean is, nobody ever explained the rules.
You're cooking with Crisco now. Are some people better positioned within the system than others? Absolutely. Do some people have access to advisors, attorneys, accountants, and strategies the average person has never heard of? Absolutely. But that's not the same thing as saying rich people don't pay taxes. More often than not, they understand something many people were never taught.
Which is?
That there are different buckets of money, and those buckets are often treated differently. And once you understand that, you stop asking, how do I avoid taxes? And start asking, how does this particular type of money get taxed?
Now that's a different question.
Exactly, and that's what we're talking about today. Now, before Harold tries to make me explain the entire tax code, we're going to take a quick coffee break.
Because you're going to have to get me tax-free.
We'll be right back.
All right. Before Dana turns this into a full financial revival, let's take a coffee break.
And honestly, if you're trying to keep up with markets, policy, and all the ways money moves, you need to stay sharp. That's why I like strong coffee. It's not just coffee for a quick jolt. and it's built to help you stay focused and steady without feeling all over the place later.
Which is useful, because this economy already got enough people feeling jittery.
Exactly. So if you want to try it for yourself, use code WKBBW. That's code WKBBW. Same coffee, less money. Also,
Stay awake. Stay aware. And now let's get back to it.
as I was saying before the break, today's myth was that rich people don't pay taxes because the system is rigged. The reality is a little more nuanced than that, because the tax code doesn't treat every type of money the same, and that's where tax buckets come in.
You should start with the bucket people know.
Well, that is the fully taxable bucket. For most Americans, employment income, less certain pre-tax deductions, falls into this category.
Meaning this is the paycheck bucket.
Most people are familiar with this one.
You go to work, you earn a paycheck, taxes are withheld, and what's left gets deposited into your account.
Federal income tax, state income tax in many states, Social Security, Medicare.
Before you ever touch the money, multiple systems have already taken their share. Everybody got their hand out before payday.
But employment income isn't the only thing in this bucket. Traditional IRA withdrawals, traditional 401k withdrawals, traditional 403b withdrawals. Many retirement distributions eventually land in this same bucket too. As mentioned earlier, traditional retirement contributions may reduce taxable income while you're working. That's one of the reasons many people use them. You receive a tax benefit today.
Which sounds wonderful.
It does, but every benefit usually comes with rules. In exchange for that tax deferral,
The government eventually wants its money.
which is why traditional retirement accounts are generally subject to required minimum distributions, also known as RMDs. And if you try to access the money too early, you may face penalties in addition to ordinary income taxes.
So Uncle Sam's saying, you can touch it, but it's going to cost you.
Pretty much. Now, there are exceptions. One example is a SEPP arrangement, substantially equal periodic payments. Under specific IRS rules, certain individuals may access retirement funds before normal retirement age without the typical early withdrawal penalty. SEPPs were actually one of my favorite planning tools when I was a financial advisor. Not because they were right for everybody, but because they showed people that the tax code often contains options they never knew existed. And that's really the lesson. Not every opportunity is hidden. Some are simply unknown. The next bucket is the partially taxed bucket. This is where many investment accounts live. Brokerage accounts, certain non-qualified investments, and other assets that may generate capital gains, dividends, interest, or a combination of all three.
See, you already lost half the audience.
Really though, let's simplify it. Suppose 4 people each make $10,000. One person earns it from a paycheck. One person earns it from a real estate or business investment. The third is a day trader. The other earns it from an investment they held for years. The tax treatment may not be the same.
Same amount of money. Different rules.
That's the part people miss. The government often distinguishes between earned income and certain types of investment income. That doesn't automatically mean lower taxes. It simply means different rules.
There go those rules again.
And that's why understanding the bucket matters, because many people spend all their time evaluating the investment without ever evaluating how the investment will eventually be taxed.
So they looking at returns and ignoring what happens when it's time to spend the money.
Now you're paying attention, and that's why many investors track cost basis, holding periods, capital gains treatment, and when gains are actually realized.
Translation?
The timing matters, the structure matters, and the tax treatment matters. The one or ones that are right for you is totally dependent on your time frame. And it is crucial to remember the investment vehicle is not the garage it's parked in. We are talking about where that garage is located. The final bucket is the potentially tax-free bucket. Now notice I said potentially, because there are rules attached to this bucket too.
Yet more rules yet again.
Some common examples include Roth IRAs. Roth 401s, certain properly structured life insurance policies, municipal bonds, health savings accounts used for qualified medical expenses, and in some situations, portions of non-qualified annuities. Now, before anybody gets confused, the principal was generally already taxed, just like the partially taxed bucket. We're really talking about what happens to the proceeds, the growth, the earnings, the gains. The question isn't, was the original money taxed? In many cases, it already was. The question becomes, what happens to the proceeds?
So Uncle Sam already got paid on the seed.
That's one way to think about it, which is why many people describe this as paying taxes on the seed instead of the harvest.
See? Now we're talking farming.
More like Bible, but okay. And remember the garage analogy. The investment itself is still the car. A stock is a stock. A bond is a bond. A mutual fund or ETF is a mutual fund or ETF. What changes is where the vehicle is parked.
And where the garage is located.
Same vehicle, different garage, different tax treatment.
Same money, different rules.
And that's really the lesson. Most people spend all their time researching the car. Very few spend time understanding the garage.
Meanwhile, the garage determines what happens when it's time to pull the car back out.
That's the part people miss. Now, before we move on, there's one more category worth mentioning: Social Security.
Leave my check alone.
Lord help me. Social Security is a little different because it doesn't fit neatly into the buckets we just discussed. It isn't employment income. It isn't a traditional retirement account. It isn't a Roth account, and it isn't an investment account. It's more of a hybrid.
Meaning?
Depending on your overall income, some of your Social Security benefits may be taxable, some may not, which means two retirees receiving the exact same Social Security benefit could have different tax outcomes.
Same money, different rules.
And that's why understanding tax treatment matters, not because you're trying to avoid taxes, but because you're trying to understand how the system works. And that's really the aha moment. Nobody avoids taxes altogether.
Well, there go my retirement plan.
Lord, please deliver me. The goal isn't to avoid taxes. The goal is to understand them, because once you understand how different types of money are treated, you can begin structuring your income in ways that may reduce your tax burden both today and in the future.
Still same money, but very different rules.
And those rules matter. Think about what we discussed last episode: long-term care, caregiving, and protecting your family, planning for the possibility that one day you may need help yourself. Those conversations don't happen in a vacuum. They have to be funded.
Everything comes back to funding.
Pretty much. A well-structured retirement plan doesn't just focus on growth, it focuses on access, tax treatment, cash flow, and flexibility. In some situations, someone might even structure retirement assets in a way that allows a SEPP distribution strategy to help fund expenses before traditional retirement age, including things like long-term care planning, insurance premiums, or other retirement needs.
So the lesson ain't, how do I get rich?
No. The lesson is, how do I put myself in the best position to take care of future me? So this week's homework is simple. Identify which tax buckets currently exist in your financial life: fully taxable, partially taxed, potentially tax-free, or a combination of all three. Then ask yourself, how much flexibility have I created for future me? And what changes can I make today that future me will thank me for?
Future me calling again, but present me still need gas money.
Then get to work on that homework.
Mm.
Now, if you'll excuse me, I'm headed to Sleepy Town. So here's the truth. Wealth inequality isn't always about effort. It's about structure. And once you understand the structure, you stop being confused by the outcome.
And start moving different.
Exactly.
All this talk about systems got me tired.
Tired or just worn out from fighting reality?
Both.
Well, when it's time to actually rest, I'm reaching for my cozy earth sheets, because after a long day like this, comfort isn't optional. These are made from viscose, from bamboo, super soft, breathable, and honestly, once you lay down, you're not getting back up. If you're going to recharge, you might as well do it right. Go to CozyEarth.com. Use code WKBBW. Get 40% off. Wrap yourself in luxury.
Yeah, I'm logging off early tonight.
If this episode helped bring clarity, stay with us. Follow the show. Share it with someone who needs it. This show exists to shine a light on the knowledge our community has believed was hidden so we can understand it and use it to our advantage.
Because once you understand the rules,
You stop guessing. Pray, plan, prosper on purpose.
share this with somebody who needs receipts.
Who keeps blocking black wealth? We digging deep to free ourselves. Faith, money, truth on the shelf. Let's talk about it, talk about it.
Who keeps blocking black wealth?
Not me, not today.
Check your credit and pray.